about the idea of, which was big for a while, I'm not sure if it still is, of people getting a piggyback mortgage. They get a first mortgage of 80%, and then they get a second mortgage of 10 or 15%, so they avoid PMI, and then they put 5% down. Do you find those work from a financial standpoint, or you better off bite the bullet if you're not going to put 20% down and pay the PMI?
It's interesting you bring that up because when the mortgage market sort of crashed in 2007, 2008, those loans completely disappeared. Mm-hmm. And they started popping up again maybe 2.5 years ago. And I saw a few clients get that. And for some people, it's not a bad option. But I haven't had a client do a loan like that in at least 2 or 3 years. And I think that there's just more options now to get rid of the PMI. The lender paid PMI is a really good option where your lender pays the PMI up front and you have a slightly higher interest rate. Another option is if someone, let's say someone has a lot of cash, but maybe their income's not really high, they could pay the PMI up front. You actually pay it at closing, and you save thousands of dollars by doing it this way because paying it every month over a number of years ends up being several $1,000s more. And so people are doing that as well if they have the cash to do it, because not only does it take away the monthly PMI, but in most cases will save thousands of dollars by doing it that way.